Hey traders, Jeff coming to you here on November 25th, 2024. I want to break down a trade that we did today with Shopify. Now, we did several trades today, but this is a day trade, and then we did some diagonal spreads and things like that that we exited out of. And from time to time, I'll show you those, but today I want to focus in because there's a really good lesson in the Shopify trade. So hang tight with me and we'll move over there. All righty, so this is Shopify. We made $405.06. Again, I'm going to break this down in detail, some of the formalities of how we trade at Full Throttle Traders. Again, as you know from the previous videos, we trade technical analysis. It's far better to trade where money has been. It gives you a really good picture of where astute traders might be going forward, as opposed to trading off data or technicals. Although we do that for certain trades, this is on the day trade side, we do far, far better by following a strategic approach based on that technical analysis. Take a look here. So again, today's winners was $928.06. We traded Shopify, NVIDIA, and Apple. Now, Apple we entered on Friday. It was a diagonal spread. We bought the December 27th 230 calls. We sold the 240 December 20th calls, and it was up about $900 at the open this morning. We grabbed half. Went stop break even, the market pulled back $5.5, $6, and we got out break even on the back. That's fine, but you never know. Apple could have definitely went higher. Now, hopefully, that Buffett's done selling his 600 billion shares dollars worth. Anyway, we're going to talk about Shopify here and one of the day trades, so stay with me. Once again, Shopify had a beautiful day trade in here, right? Had a beautiful void on the day trade. It pulled back quite a bit here to the 8-period moving average in here. But to really confirm this, because it was so far up here, I had to drill down the 65-minute chart. So again, if you're not using an hourly or a 65-minute chart, you have to have that multiple time frame stance, because when you see things in one trade, one cycle like the daily, you have to drill down. You want to see angles of retracements. You want to see how it got there. It's not as important about where it is. It's about how did it actually get to that point. So take a look at this on the 65-minute chart. Notice the angle of retracement was very smooth, right? Less than 45-degree back. Also, it was in transition. So when I saw the daily, I saw none of this. As I drilled down the hourly chart, the 65-minute chart, I saw all of this. As it went higher in here, still wasn't convinced. Many trades will break above a trend line, a trajectory trend line, but pull back in. What really convinced me was the pullback after it pulled up, holding the moving average, and then gapping in to avoid that point. At that point, it was go time. And if you're not looking at things like this, a lot of times traders get caught up in this, and this all would have worked, but many times they'll pull all the way back and just go sideways and pretty much just kind of go down, even though they're on the other side of the trend line. So again, light pullback, 38% to the 8-period moving average. Back in the void. Market was weak today. Ended up being weak. We didn't know that at the beginning of the day, but you'll see a couple slides referencing that here. How did we know this was going to hold up? Well, to be honest, we didn't. But the fact is that when you have good patterns off the larger time frames and you're focused in on multiple time frames, there's a better than average chance that it will outstand the market pulling back. Now, sometimes if the market pulls back hard, nothing's going to hold up like that. But this did well. So let's take a look at the exact entry and how we entered. Before I do that, I want to show you where the market was gapping up here. 1.25 standard deviation went right up to close to about 30 cents from 2SD. That's pretty strong. I wouldn't have done anything at SD2 other than the fact it was $600. Psychological number, whole number, century number, those are all things you want to consider. But normally, when it gets up this far, I expect it to hit it, bobble back, and then may go higher at that point. So I didn't play anything type of jump rebound off of that because of how far it gapped up in that. Now notice here, the SPY had a gap fill. That gap fill was all the way down, this over here, was all the way down to this bottom line here, about $5.5, $6 to be exact. So definitely had a huge pullback in here, but just throttled back here. It wasn't anything, it wasn't straight down once it kind of got in here. It bobbled at one standard deviation, broke those lows, and then it had its eyes on this gap fill. Now, ultimately it went down, but what was our Shopify doing was it was holding up pretty good early on. So we can see the move up. We had a red bar ignored, got up. We had a good gap. We had a good 65-minute. We had a good daily chart. So I told the traders in the room, look, we're going to do this on a pullback, not a breakout. A pullback down between this VWAP and also the 9 EMA. And so we entered somewhere in here. Actually, we're at 109.40 is exactly where we got in at 10:18 this morning. This just represents commissions in there, which is a light series, so I don't have any really commissions on it. And then we actually moved our stop up to here. Why? As remember last week videos I talked about, I used that 9 EMA on the 5 a lot for management. It is so precise, sometimes it's scary. So we moved up here, we added to a position, and about 8 minutes later, or also about 5 minutes later, again, I was in 500 shares at that point at 109.97. It was actually 109.90. We slipped in 7 cents. And then I looked for exits at this point. The exit was at 10:38. I was looking to exit here, 125 shares or 1/4 of my position at 110.65. How did I know that? I didn't. All I want to focus on is that, is this a good trade? Is this what I'm looking for from a relative strength standpoint, from, you know, an analysis when I start talking about relative strength, poor relative strength, market pulling back, and then my targets become more mechanical unless I see traffic in the way. Now, if there's some bars to the left, like Meta had today, it would have been up, and then I would actually aim and take some off at that bar. This didn't have anything to the left. So because of that, I went with my full-blown target of 4R in here. Now, pull back here, and notice the second exit at about 50 minutes later was the remaining balance of 375, 110.56 at 329. It's because I took out 375 here. So those totals is 405.50, 450.06. Now, it did go up to 112, 113 late day, but it pulled back because the market had no remorse. It just kept diving to that gap fill. So this actually just kept pulling back. And eventually, it did go higher. But we had to get out. We got out because otherwise we'd have been underwater. We don't want to have a good winning trade turn into a losing trade. And that's kind of built in the mechanics. If you didn't see that last week, go back to the previous videos, watch them. There's a lot of time and effort over the years I put in those type of formats that go into standard deviations, pullbacks, and things like that. And so look at that, and that gives you a comfortable way of managing a position. Managing is my easy part, but it's a hard part for someone else. What's easy for a lot of people is hard for others because of emotion. Finding the right trade is the key. And if you don't, you can manage it all you want, but if you have the wrong trade, you're still going to stop out. You have good management, but you need to find the exact entry. Why is that entry popular? Why is that something you want to focus on? And again, I talked about it through VWAP and the pullback to the 5. The entry was right there, and that's about the low, and it just triggered off that point. So again, good trade there. So I want to take a look at some of our dashboard trades here. And let me go back here real quick here, and I'll show you. Again, the ultimate day was what, $928. So we had other trades in here. So when I'm doing these trades, I just want to pick one and share with you. Just break that trade down as detailed as I can, help you understand void, the multiple time frame analysis, what looks clean, the pullbacks, the limitations, where they are, moving averages, the moves higher, and of course, how it's related to the market pullback, right? And this is the dashboard. I told you last week I would show you the dashboard. What's important here is the annualized portfolio returns 155% since April 15th of this year. So potentially, if you start with $10,000, it could have been 19. But again, that's assuming you got every trade. You probably wouldn't have, but that would be our mechanics. This is a little bit of a cycle of how our trajectory works per month. Again, this is just only based on a 250 trade. I'm doing 5,000 risk a trade. Do the math, right? So you would start there. You would start at $5 a trade, 10, 20, and work your way up. When you get comfortable and you want to take some diagonal spreads, when you want to do $5,000 risk, well, that's where I am. But I didn't start there. 25 years later, that's where I'm at. So you want to still start at $5 and $10 risk, or as low as you possibly can, or even paper. So when I'm showing you these here, I'm just showing you this as a flat 250 risk per trade. So you can be higher or lower that based on where your comfort level is. So you can kind of get an idea how we've done. If you have any questions or would like to Zoom with me or just on an email, you can certainly email me, jeff@fullthrottletraders.com. No cost, just, if you want to just pick my brain a little bit, you can, or I can see how you're trading. Maybe I can give some insight to see what you're doing, and maybe take some of what we're doing and be able to mesh with what you're doing, and maybe just bring in a few more components that could well round your strategy here. And again, I don't know what you're doing, but it might be advantageous for me to kind of just understand a little bit here, so maybe I can help you a little bit on that side. So anyway, Full Throttle Traders, we're one of the best ones out there, guys. 25 years experience, been trading full time in there. We have quite a few members on our team here that enjoy these daily live trading calls as we're going through the trade. We're literally getting in together as I'm calling them real time, as I'm moving the stop, as I'm exiting the trade. It's all happening in real time right in front of you. So check out our site if you like, and hopefully we'll see you in there, or maybe I'll see you on a Zoom call. Thanks. Enjoy the rest of your day. See you on the next training call.